Apple Inc. is an American multinational corporation that designs and sells computer electronics, computer software, and personal computers. Established on April 1st, 1976 in Cupertino, California, now employs approximately 63,000 people. The word computer was removed from its name in 2007 as its traditional focus on personal computers shifted towards consumer electronics. Fortune magazine named Apple the most admired company in the United States in 2008, and in the world from 2008 to 2012. This was quite a feat for a company that seemed lost only a decade earlier. As of July 2011, Apple had 364 retail stores in 13 countries, as well as the online Apple Store and iTunes Store. It is the largest publicly traded corporation in the world by market capitalization, with an estimated value of US $626 billion as of September 2012. It is furthermore the largest technology company in the world by revenue and profit, earning more than both Google and Microsoft combined. Apple Inc.'s organizational structure, while currently much more formalized than in the recent past, is surprisingly flexible, non-hierarchical, and responsive for a firm of its size. Now we're going to look at Porter's 5 forces. First, the intensity of competitive rivalry. We have a commoditized product, intense price competition, extreme competition for large corporate business, fast product and technology lifecycle pace, and products based on standardized components which are difficult to differentiate. When we look at the bargaining power of suppliers, we see a reliance on proprietary standards, few chip designers, only one dominant player, high switching costs from suppliers, and suppliers reliant on industry for distribution and consumption. Now, with regard to the bargaining power of buyers, we have consumer dependence on computers, which equate to a high demand. Varying needs, for example, latest and greatest versus satisfying basic needs. And then we also have the difficulty of switching due to proprietary platforms. Now, for threat of substitute products, we have feature-rich smartphones, alternate forms of entertainment, and a central hub for leisure, socializing, entertainment, as well as business. And lastly, we have the threat of new entrants. We have large economies of scale, outsourced to OEMs for production, several large entrenched players with well-established brand loyalty, and then we have the convergence of mobile devices. The value proposition for Apple Inc. is bringing the best personal computing, mobile communication, and portable digital music and video experience to consumers, students, educators, businesses, and government agencies through its innovative hardware, software, peripherals, services, and internet offerings. Now we're going to take a look at the financial performance of Apple over the past 5 years. The stock price, as listed on NASDAQ for Apple, has increased sixfold over the past 5 years. The stock price for Apple on September 18th, 2008 was listed at $113.17 US, and on September 4th, 2012, the stock price for Apple closed at $702.10 US. With respect to corporate social responsibility, Apple has implemented the Apple Recycling Program, which allows customers to recycle old computer systems and peripherals with the purchase of a new Mac computer, offering incentives to recycle old MP3 players and mobile phones through the program. This program obviously helps to reduce the amount of electronic waste put into landfills. Electronics recycling is important because there are many toxic and environmentally harmful chemicals in electronics that can leach into the ground if improperly disposed of. So Apple Inc. is engaged in the design, development, and marketing of personal computers, media devices, and portable digital music players. Through the integration model, both horizontally and vertically, the company has been able to build non-replicable and sustainable competitive advantages. However, as the market growth shifts to emerging markets, Apple's price positioning will impact its competitiveness. So now we're going to look at a SWOT. We're going to do a SWOT analysis to examine the strengths, weaknesses, and opportunities and threats for Apple Inc. We're going to start with the strengths. A combination of horizontal and vertical integration created formidable competitive advantage for Apple. Also, a string of successful products and industry-leading growth rates. Now, weaknesses. Apple is very dependent on the iPhone and iPad, and there are few products at different price points, which really limits their target market. Now, with regards to opportunities, there are emerging opportunities in enterprise market. Emerging nations provide strong growth opportunities, and Apple TV is another great opportunity. Regards to threats, as market shifts to emerging nations, the price competition intensifies significantly. As well, there is intense competition already in the market. We're also going to look at a BCG growth matrix for Apple Inc. So for the stars, which is a high business growth rate and high market share, both the iPhone and the iPod are listed in this category, which means they both need further investment in product development, and there are great opportunities available in the market for growth. Now for the cash cow, which equates to low business growth rate and high market share, Apple iTunes digital downloading software is without a doubt a cash cow. Apple clearly is a market leader in this market segment with 82% market share. Its closest rival is Napster, which encompasses only 3% market share. This huge difference of 79% shows that Apple has outplayed all its counterparts in this market segment. Now for the question marks, which are high business growth rate and low market share products, are the Mac softwares. So they belong in this category because there's a possibility to capture further market share if provided with funds for product development and innovation. Otherwise, they could fall back into the dog category. Now, dogs are low business growth rate and low market share, and Apple Macs really should be relegated to the dog category, as Apple is not a market leader in this market segment and does not enjoy a majority percentage of relevant market share. Additionally, there are few chances of capturing further market share even if further investment in product development is done for this product. With respect to strategy moving forward, Apple has not been able to effectively gain market share in emerging markets where historically lower priced phones have been popular. Apple's premium pricing strategy offers a perception of quality and prestige, but this strategy will prove to be challenging and could have a negative impact on the average prices that the company is able to command in emerging markets. As well as going social. Apple has traditionally taken a different approach, but in June 2011, Apple announced it would integrate support for Twitter into its mobile operating system. And recently, Apple said it would do the same with Facebook. Such support extends Apple's reach into social networks, which it has not been able to build on its own.